What you need to know about Meta. Shortly after joining the Trillionaires Club consisting of Apple, Microsoft, Alphabet, and Amazon, Meta is now worth barely more than Pfizer and Coca-Cola. But why? Mark Zuckerberg was once on his way to becoming the richest person in the world, with his net worth reaching $142 billion in September 2021, making him the third richest person in the world. But nowadays, Mark Zuckerberg and Meta Platforms, the parent company of Facebook, Instagram, and WhatsApp, is on something of a journey, and his personal wealth has plummeted over $100 billion in just over a year, making him worth only $37.2 billion. The company has stated that it is trying to move from its mobile and desktop social networks realm to the metaverse, a digital world accessible through augmented and virtual reality to attract the new young audience that has abandoned Facebook. But the metaverse pioneering company is displeasing investors with its massive spending ambitions amid slowing revenue growth. The founder, Mark Zuckerberg, insists the metaverse is the next big thing, and he's betting the company's future on it. He plans to lose even more money building the metaverse, while his source of revenue business is shrinking. Meanwhile, Meta's stock price reached 75% down from its all-time high. The company is now worth half as much as Berkshire Hathaway and has a smaller market cap than companies like Bank of America and AbbVie. Other tech companies that propelled past the $1 trillion mark are still there and remain the most valuable businesses in the United States, even though they've taken big hits this year alongside of the rest of the market. So what exactly is happening at Meta? Is this situation entirely Zuckerberg's own making? What are Meta investors supposed to make of all this? And is the stock still a good buy or a train wreck waiting to happen? All of this and more will be uncovered in this video, so make sure you watch the video till the end to find out. Let's dig in and see. A year ago, Mark Zuckerberg stated that virtual reality is the next frontier for Facebook's growth. So far, there's been very little of it, but we're hoping that things will change soon. Zuckerberg has emphasized that his company is dedicated to the metaverse, but he's also acknowledged that the firm is facing challenges and would have to reduce its global workforce by 13% or more than 11,000 employees. Yes, Meta would be experiencing a record number of layoffs as a result of their business's poor financial performance. Mark Zuckerberg has admitted that the company is focused on becoming more efficient and may be a smaller organization next year as a result of this. So, what are Meta's challenges? Well, Meta has problems on several fronts. Let's look at the key issues slamming Meta shares and deepening questions about its long-term prospects. Number 1 is advertising challenges. With businesses desperate to reach their billions of daily users, advertising is Meta's main source of income. However, the resignation of its COO, who pioneered much of the company's booming ad business, must have raised concerns for investors about whether Meta will continue to retain and grow its digital ad market share. Number 2 is slower Facebook growth. Facebook is seeing some decent user growth, but it's unlikely that this will continue in the future as its current active users are far from the numbers that Facebook experienced in earlier years. The days of wild growth of Facebook users seems to be over, and the slower growth comes after Facebook earlier this year said it had lost users for the first time in its history. Hey, do you want to see more interesting videos like this? Then take a break, like, and subscribe to the channel to stay updated whenever we upload similar content. Let's continue. Number 3 is the competition with TikTok. A social media juggernaut like Instagram is struggling to keep up with upstart apps like TikTok, which has grabbed younger consumers. The Chinese-backed app has grown to more than 1 billion users on the back of its highly shareable and strangely addictive short videos. However, TikTok is not as effective as Instagram at making money from ads because people tend to skip past those short videos. As of now, that means that the more Instagram pushes people towards using Reels, the less money it might make on ads, but that's soon to change with monetization on Instagram Reels coming very soon. And that's not all. Number 4 is its crazy metaverse spending. Zuckerberg believes that the internet's next generation is a virtual reality and augmented reality world that he's willing to spend big on. Meta's Reality Labs segment, responsible for developing Meta's metaverse, has lost over $10 billion in 2021 and $9.4 billion so far in 2022. However, the losses in Meta's Reality Labs have been very high, and some investors may question if his vision is the best use of company resources. So, should you invest in Meta stock? Despite the questions about how Meta is being run, we can't deny that Meta is a very powerful brand. The company is in trouble because it's cutting advertising budgets in the face of economic uncertainty, changes to Apple privacy settings that hurt its targeted ads, and competition from rivals such as TikTok. The company is also instituting mass layoffs, cutting over 11,000 people or 13% of its workforce, which helps it cut costs. Meta stock could be a cheap option, but it's possible that it will never return to its previous level of profits unless Reality Labs is successful. Although Mark's long-term investments into the metaverse might provide greater returns over time, these next few months look important for the company. I suggest waiting until investors get additional clarity about how much the company is willing to spend on Reality Labs before investing in the company, and how they plan to continue their social media dominance. That's it for today's video. What are your thoughts on what's happening in Meta? Let us know in the comments down below. If you learned something, subscribe with notifications on. See you soon.